Good afternoon. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. The Israel-Hamas war has spooked equities market as much as people all around the world. Investors remain cautious, watchful of the global events with risk of sentiment grappling the Indian markets as well as broader markets elsewhere. Suyash Maheshwari joining us here in the studio. Suyash, give us a lowdown of how markets ended, not so surprisingly, in the red.
Yes, Shweta. So Indian markets continue to remain under pressure for the majority of the trade. Now, after opening deep in the red, we saw some bit of recovery in the early morning trade. Although by mid-morning, Nifty was seen facing resistance at about 19,580 levels, and from there on, the selling again resumed, and as a result, the index also briefly dipped below the 19,500 mark. And at close the index was down about 140 points or so, and closed just marginally above the 19,500 mark. Now Sensex also dropped by about 480 points in today's trade, and it also closed marginally above the 65,500 mark. Now broader market, Shweta, we are seeing some sort of selling pressure taking over there. They underperformed the Indian markets today. Both mid cap and the small cap indices were down about 1.5 to 1.7% in today's trade. And we also saw a spike in volatility. The India VIX spiked by about 12% and ended at about 11.55 levels. Now among sectors, Shweta, Nifty PSU Bank was a worst performer today. The PSU banking index fell about 3% in today's trade. Media stocks also fell about 2% in today's trade. Other sectoral indices that saw a loss of about 1% today were Nifty Bank. Now the Nifty Bank index also closed below the 44,000 mark, which was seen as a crucial support level for the index. Let's talk to Mohit Gang more about it. Nifty Auto was also down by about 1%. Metal and private banks also, Shweta, fell about 1% each. Now, among sectors that outperformed the market but were also in the red today was the IT pack, the FMCG and the pharma pack. All three indices ended marginally lower but managed to outperform the market today.
All right, that's of course the lowdown. Majority of sectors ending deep in the red as expected, essentially a fallout of what's happening in West Asia, the Middle East as we call it. Mohit Gang, who is the CEO of Moneyfront, joining us on the broadcast at this point. Mohit, good afternoon. Thank you for taking time out. I want to begin by asking, we've seen global markets and Indian markets emanating what was expected, especially after an all-out war broke in West Asia. How long do you think markets are expected to remain spooked as much as they are? Can we see some sort of positive further development from tomorrow onward, the Tuesday trading session?
Hi, Shweta and Suyash. Look, honestly, I think it's an unfortunate and an unforeseen kind of a scenario which has unfolded over the weekend. And any kind of a geopolitical event, whenever it has happened in the past history also, markets have always reacted to that event some bit negative. However, it also depends on the longevity of those events. But I think history testifies it amply clear that whenever you have gone through a geopolitical event and a correction thereof, those have been great buying opportunities for the markets, and markets have like really rebounded back very, very emphatically. And the recent instances, or you go long back in the history and you track the data, and all will vouch for this very fact. Like when Russia-Ukraine war started last year, start of the year, markets initially corrected, but then the rebound was equally strong and fierce, right? And if you go back during the Gulf War days, which was the 1991, right? Even then, I think around 2021 odd days, market reacted very badly. But in the next year or so, market kind of gave a 30% gain from there on, right? And the history of this particular West Asia conflict, which is the Israel-Palestine conflict, in history there have been many instances where both the sides have come fighting at each other, and every time markets haven't reacted that badly. To be very honest, you've had seen some kind of a reaction, but the recovery has been fairly sharp. This time around, though, one can argue and make a case that the escalation seems absolutely serious, and to a much larger scale and extent that what one has witnessed between these two factions in the recent history, right? So the scale and intensity is fairly serious, but I think the only risk is if from West Asia it spreads across to Middle East Asia, which is if somehow Iran comes into picture in this entire thing or the equation. That's when you can have some serious repercussions for the market, because Iran is one of the leading oil producers in the globe, and that could have serious escalation in crude prices, and which can perhaps create some havoc in the market. But as of now, I think market should start recovering from tomorrow or whatever.
Okay, so we will go to crude in just a bit because that's going to be an important discussion. But you're saying that this is a buying opportunity. This perhaps could be a short-lived scenario, and investors at this point in time should be looking at a buying opportunity here.
Shweta, if you get reasonable dips in the names on which you are tracking where the valuations are attractive or they become attractive by virtue of correction, yes, I think investors should look at those opportunities. Just by virtue of this event, I don't foresee a huge risk in the market. As I'm talking to you, I think the TA35 index, which is the Israeli market, is trading up. Honestly, right? If that market is trading up, is in the green, then it indicates the kind of confidence which market has in the underlying fundamentals of the overall global economy and so on and so forth. So my sense is, unless the escalation is serious, it spreads out to Middle East, it spreads out to other countries. I think investors should still wait and watch. Nothing's going to change dramatically in next 3-4 days. But yes, wherever you find opportunities which are lucrative, you find fundamentally good stocks trading at reasonable valuations or at prices which you are looking at, then yes, investors should dip into those.
All right, fair enough. Let's go to crude, because that's a conversation that a lot of analysts globally, nationally have been having for a while now. Crude, what is the immediate impact that you're looking at on crude prices? Crude prices are very, very volatile, touching 90 and over $90 a barrel as of this afternoon. Is the volatility further going to deepen as a result of this war? We know that neither Israel nor Palestine is an exporter of oil. What sort of impact are we looking at?
Oh, definitely. Both the countries don't export oil per se. The only big exporter, as I said at the start of the show, is Iran. And there are some linkages which have been found or which have been claimed around that Iran is kind of involved in backing the Hamas group. But my sense is, if somehow Iran gets involved in the entire equation, or if US kind of makes the sanctions more stringent on Iran, or if there is a blockage from Iran's side, something of that sort, that is when you can see oil soaring high. I think commodities is the first pack in any geopolitical tension you see across the world, whether it was Russia, Ukraine, or whether it is any other such kind of a conflict. Commodities is the first pack which will start shooting up, because obviously those are all countries in some form or other are either big exporters or importers of one or the other commodities, and that's what actually drives prices of many manufacturing companies across the world. So yes, crude will be impacted for a fair bit. My sense is, I don't think so crude will ease off in a hurry or in a rush. Even if the situation de-escalates, my sense is crude will remain on a boil for some time. Only risk to India is if it actually touches 100 and goes beyond that. That's when India actually starts bleeding a lot. And I think that is one scenario which every one of us will have to monitor very, very closely, because anything above 100 is not sustainable for India for a fairly long while.
All right. Do you see crude touching 100 anytime soon?
Shweta, it's extremely tough to give a prognosis on commodities and crude. Look, honestly, geopolitical tensions can take it anywhere. But as of now, if Iran doesn't get involved, I think it should remain in this range.
No, makes
and what happens to, because Iran is involved one way or the other, there may be no official confirmation of that, or Iranian government may not come on record to say so, but Iran is involved in one way or the other. What happens to inflation as a result of rising crude prices? Inflation is only going to worsen for a lot of developed economy, especially for the US. If crude gets any more expensive than $95 a barrel, it already touched 96, 97 in the past few weeks.
And also the supply chain disruptions that we'll see because of the war.
Totally. I think both the points are absolutely relevant. If I recall the numbers correctly, I think every $10 increase in crude prices leads to almost $1 billion of deficit, increased deficit in India's trade account, right? So that's a massive number, and this also leads to a huge inflation. The oil basket is the biggest basket in the overall inflation index, and that leads to the rising inflation. And yes, supply chain is one of the biggest things which gets disturbed. Iraq and that region is a major transport hub. The Haifa port recently, which was acquired by Adani Ports, is also one of the main centers out there. And overall, whenever these kind of things happen, I think the supply, the logistics part, the commodities, the crude, that region is extremely sensitive to it. Right. So I think the impact on inflation, yes, definitely will be negative. We'll have to see if this lasts for fairly long. Look, if this situation de-escalates within a week or 10 days or something, or even in a month kind of a scenario, then we are fairly okay with it, right? But if it goes beyond 3 months, 6 months, and a few other countries, neighboring countries get involved, if it goes to a serious proportion, then yes, there are ramifications from the globe,
All
from the
right.
globe.
Okay, let's talk about supply chain disruption. Are you anticipating a similar impact as of the Russia-Ukraine war, similar to that when it comes to the Hamas-Israel war? Will that play out, or is there a very negligible impact as compared to a global war that we have been witnessing for a year and a half now? What sort of impact are you anticipating, given Middle East does not get involved in near term?
Look, if Middle East doesn't get involved in this thing, then the impact is fairly negligible. Honestly, I think West Asia is not a place or not a port which is a global what do you say a main transportation hub or something like that. So I think that's a fairly isolated kind of a territory or a region. So I don't think so. It impacts the overall logistics scenario across the globe. But yes, as I kept repeating on this show, if Middle East gets involved somehow, then I think the situation can get worse. But as of now, it doesn't look like that the Middle Eastern countries are getting involved in this, barring Iran, which also might not impact the global logistics or the supply chain per se, because Iran, any which ways, is a strictly monitored and a banned country. From a US perspective, they have a lot of restrictions on Iran, right? So it's not that Iran is a big hub. Right, the other hubs which are larger are more towards the Middle Eastern side or towards the Saudi side and so on and so forth, or towards the Egyptian side, basically. So I don't think so it impacts the logistics of the supply chain that much.
Mohit, what is your outlook on gold now? Do you expect gold to, kind of come into focus now? I mean, the gold prices have corrected to about a 7-month low, but we are seeing some sort of a uptick given that war-like situation has broken out in the Middle East. Currently, it's between Israel and Palestine. But if the situation escalates, where do you see gold heading from here?
You can never keep gold out of the equation, Suyash, right? I think any global tension, even a small whiff of it, will make investors flock towards the yellow metal. It's always been regarded extremely highly for its safety and security, and I think in times like these, people definitely tend, or investors definitely tend to move towards the yellow metal. Today, if I'm not wrong, again the gold was up around 1.5% or so. And if the situation continues, I think we can see a up move in gold. It's already corrected a fair bit. But my sense is, yes, if this situation continues, then you will see investors flocking towards gold.
All right, let's also
difficult to give a range, actually.
Okay, fair enough. Let's also quickly move on to some of the stocks that we are tracking, stocks that will have a likely impact, an immediate impact of war.
Yes, Shweta. So let's first look at Adani Ports. Adani Ports was among the worst, performers in the Nifty pack. The stock was down about 5% or so, and it is directly impacted because, Adani Ports, as Mohit was also saying, owns Haifa Port. And, I was reading reports where it suggested that, Israel may consider closing or may have already closed Haifa Ports. Now, that could be a major dampener for the stock. But at the same time, Haifa Ports only, contributes to about 3% of the total cargo volume for Adani ports. So perhaps the downfall may be limited to the kind of correction that we are seeing today. Other shipping and logistics stocks were also impacted, given that there is uncertainty regarding the fate of IMEC, which is a Indian Middle East European Economic Corridor. Now there are concerns that it could the plans to launch that IMEC corridor will take a back seat. And as a result, we were seeing some correction in the shipping and logistics company stock. Now, as we were talking about earlier in the show, that crude prices have seen a spike. The companies that are in the business of exploration and production of oil, such as ONGC and Oil India, surged today. Now they were ONGC was up about 0.41%, whereas Oil India gained about 0.53%. Now these companies, for them oil is the final product. So whenever the oil prices go up, their profitability improves and their margins also improve. So that's why we are seeing an uptick in those stocks. On the other side, downstream companies such as Indian Oil, Bharat Petroleum or Hindustan Petroleum saw some profit booking today. Indian Oil was down about 2.5%. Bharat Petroleum was also down about 2%. Now this is because crude is a raw material for these companies. They refine crude to make finished goods. So if the input costs go up, the profitability is also impacted. And as we see that these companies, OMC oil marketing companies, have not been able to transfer that cost to the consumers. The price of both diesel and fuel has been has remained relatively stable in the course of the last 6-7 months. So any uptick in the input cost is a dampener for these stocks, and as a result we are seeing some correction over there. Now Asian Paints, Berger Paints, these are representative of the overall paint stocks which saw a correction today. Now paint, crude is an essential raw material for these paint companies. It accounts for about 30 to 35% of the entire inputs. So any surge in crude prices is negative for paint stocks. Also, this was the reason why some of the tire manufacturers also collapsed. As you can see, MRF and CEAT saw decent bit of correction. CEAT especially was down about 2.36%. The reason again being that crude derivatives are essential raw materials for these tire companies, and as a result we are seeing this sort of a correction.
All right, Mohit, from what we are looking at, all stocks related to oil are under pressure this afternoon. Does this mean that the markets are in fact anticipating crude to hit an all-time high, breach that $97 mark? If yes, this would wreak havoc not just for oil manufacturing companies, or rather OMCs and tire companies and all the other stocks. They could remain in news, in action for a while. Mohit, you are on mute.
Oh, I'm sorry. Yeah. So I was just saying, one of the key reasons why few of these stocks haven't done exceedingly well in this rally is all because of oil. Look, oil has continuously been on the boil for last year or so. Since in fact the Russia-Ukraine conflict, oil has been at a relatively higher level than what it has been historically, right? Now, the thing is, markets are always lead indicators, and markets will always factor in the risk first and the rewards later. So market has already factored in a price escalation in the oil. Oil has already gone up by around 4-5%. Brent has already touched $90. Will it go beyond 95-100? That will all depend on the conflict and the duration of the conflict, and how far the conflict actually escalates, right? Otherwise, I think oil remains in this range, but even this range is a fairly steep range for at least the paint companies, the airline companies, the tire companies. Oil, as you rightly said, Suyash, is a key input material, right, which goes into raw materials or which goes directly into production. So all these companies will continue to remain under pressure for a fairly long bit. My sense is this situation won't ease off immediately, even if the scale of the war reduces. But the situation won't de-escalate, as it was very clear from what the Israeli side spoke yesterday, that be ready for a long war. That was the statement which came out, right? So my sense is this will go fairly long, honestly, and I think oil will continue to remain hot. for next 2-3 odd months. Whether it crosses 100 or not is a different matter. If it
Right.
does, then yes, these stocks will be extremely under pressure. And my sense is investors should just stay away from these stocks as of now.
All right, looks like
And
investors are spooked at the moment. Oil marketing companies also trying to factor in what could be a larger impact of high oil prices in days and months to come.
yes, Mohit, before we let you go, I just want to get your view specifically on Adani Port, a kind of correction that we saw today, 5% drawdown in the stock prices on reports that Haifa port may be or could be shut down in the near term. What would your advice be to investors? Should they wait on the sideline, given that the concerns are still there, and if the port is in fact closed, it could be a major dampener for Adani ports?
Look, honestly, Suyash, I think the Haifa port is more towards the Lebanon and Syria side. If you see the ports across the the Israeli coastline, Haifa is the last port and is the farthest away from the Hamas region, or right. So my sense is that port is still quite safe from the war zone, typically, which is right now, unless the war front opens from the Lebanon side and the Syrian side also, which can't be ruled out. Honestly, I think the Lebanon side has also started boiling a little bit, as I read in the newspapers. But my sense is that is still farthest away. Plus, the contribution of Haifa to overall Adani is only, I think, 2%, which or 3% maybe, which has just come out. Right. So my sense is it shouldn't be impacting the overall stock that much. But yes, the sentiment is sentiment, and I think not just Adani Port, but even the new listing, the JSW Infra was down. The port's stock was down almost 5%, which doesn't have any linkage to that region specifically. But even that stock was hammered badly. So my sense is just the market and the sentiment, which tends to react a bit sharper in these cases.
All right, Mohit, we'll get you back as soon as we can. This is a big story that we continue to track all details, of course, here on News9. Thank you so much for taking time out. And keeping up with an active war declared in West Asia, casualties are mounting in both Israel and Palestine. How will the ongoing conflict affect India-Israel trade ties? We are discussing that. Remember, as far as immediate impact is concerned, there is no immediate impact being seen on India's trade with Israel. However, it can create supply-side problems if the conflict escalates or continues beyond a usual expected timeline. India's export to Israel account for about 1.8% of India's total merchandise export, led by petroleum products. Israel buys around $5.5 to $6 billion of refined petroleum products. In financial year 23, India's total exports to Israel stood at $8.4 billion. And India, on the other hand, exported $2.3 billion worth from Israel. All of that, of course, going to play up. Karthik Malhotra joining us here in the studio. Ajay Sahai is also with us. Let me firstly go to Ajay Sahai, who's the DG FIEO. Ajay, thank you so much for taking time out, sir. What sort of impact are we looking at as far as import-export between Israel and India is concerned in the short run as well as in the long run if the war continues? So you're on mute? Right, we can hear you, yes.
We are assuming that it will be just a kind of terrorist attack which will be dealt by Israel, and the neighboring countries or the global players they will not jump into at this point of time when we are still struggling with the war between Russia and Ukraine. The world can't afford a second war, which will definitely hit death blow for not only the global trade but also the global economy. And I think you have rightly said that as of now we are not seeing much challenge. Of course, our concern will be definitely on the crude supply, which in any case is moving up and crude prices may go up. The other concern is with regard to the shipping cost, the freight cost, because I think the number of fleet may not be the same as they are prior to this crisis, and the insurance premium on the ship is likely to go up. There may be flight of capital also from various stock exchange to the US, which will appreciate the US dollar also, which is not so good sign for India's export. So far as specific to the trade with the Israel is concerned, I think we are little concerned with the supply of raw diamond, because Israel is one of the supplier of raw diamond, and the supply from Russia is already impacted. And if both Russia and Israel is out of the market, probably it may affect the supply of rough diamond, which in turn may affect the cut and polish diamond export. But we are hoping that the G7 proposal for lifting restriction on supply of Russian diamond may come into play very soon. And if that happens, we are not expecting much challenge.
Mr. Sahai, let's leave diamonds aside because that's an all-new discussion and we will of course address that as well. But I want to understand from you $10.7 billion, almost $11 billion, and India and Israel being one of the partners that India has, in fact, on which India accounts for a trade surplus rather than a trade deficit. So two questions to you. Number one, is $11 billion that big a trade volume that even if it were to get impacted, is there going to be a direct impact on the Indian economy? And number two, even if you look at the trade surplus at about $6 billion or so, as compared to the total trade deficit that India had last year of about $266 billion, is there going to be any dent at all when we talk about pure macroeconomics?
No, I don't think, because if you're looking into the oil trade, in fact, more than 50% of our trade with Israel is of the oil only, and we have wonderful opportunity on export of diesel and other products because Russia has already decided they will not be supplying these products to European Union from October onwards. Moreover, we also feel that since Iran is also getting a participation in the war, probably there may be further sanctions coming on the Iran, which will create much more market for Indian oil sector. And that's why we are not worried. I'm pretty sure that we will be able to recover much more than that. I think for more important to us is the strategic partnership which we are having with the Israel and Israel cooperation in many other areas also that is much vital for us. And probably the Indian startups are also working very closely with Israel startups, and that's an area of concern. But since most of the transactions and interactions happen over the digital platform, we don't expect much disruption of that also.
Okay, and since you're talking about this whole trade that Indian startups are engaging with Israel, I think it's important to touch upon the I2U2 partnership as well, which is being referred to as the West Asia Quad. So this includes, of course, countries like India, Israel, along with UAE and US. And just about 2 weeks ago, we were talking about a space partnership also jointly being held. Do you see any roadblocks to that?
No, in fact, I think one of the reasons which people are citing is that Hamas may be upset with the way Middle East is approaching Israel, and probably the partnership of the Middle East with Israel is something which may not have been liked by the fundamentalists. That may be one of the reasons, but you have rightly put it that ITU2 is a very strategic partnership for India, and Israel is a very important partner for us, not only in space defense, even in renewable energy and technologies. Particularly in the electronics sector, R&D is a forte of Israel, and many of the Indian companies are working with the Israel for R&D and technology transfer also. So from these perspective, of course, Israel is extremely important market. But so far as the trade is concerned, as of now, we are not expecting much change in the composition of the trade, and nor we will be impacted even if the trade is disrupted, because we will be able to recover in some other markets.
Okay, and talk to us specifically about the defense deals as well, sir, because India and Israel also go a long way when it comes to India procuring munitions from Israel, and even the drones that we are talking about and anti-tank missiles, etc. India has in fact done emergency procurement of even defense equipment from a country like Israel. So now, of course, as we understand, Israel is going to use all its military power against Hamas. And in the absence of manufacturing being done to cater to external markets like India, how do our defense deals really get impacted from here?
So in fact, I think that's why I'm saying it all depends what will be the intensity of the war and how much the war will prolong. Because if it prolongs for 2 months or so, these questions may come into play. But if that's why I'm much more concerned how the Middle East and some of the major global player participate in this development. If they are not participating actively, I don't expect much challenge for that. It may be sorted out by Israel in a fortnight or so, but participation of the Middle Eastern countries on some of the global players will definitely escalate into a very major crisis for everyone, which may affect, of course, the defense supplies also temporarily.
Okay, and talk to us specifically about the oil and gas sector. Let's assume for now that Saudi Arabia is not going to be an active participant in the war because, you know, it doesn't have a military of its own, you know, to a scale that it can participate in an active war. But Iran, of course, we have ties with Iran when it comes to gas. And in fact, that pipe dream of the gas pipeline, etc., coming through Pakistan, yet to see light of the day. So on oil and gas specifically, our import bill, overall inflation in oil because of the Middle East region being in conflict, is that a cause of concern right now? We are also seeing crude, of course, on the back of the war, which had corrected to about $84, $85 per barrel, now inching up closer to 90 again. So specifically on oil and gas, are we seeing some you know, some stress on numbers showing up?
Yeah, definitely we are seeing some challenge on that, because in any case the supply side has been impacted because Russia and Saudi Arabia has taken the voluntary cut other than the cut which OPEC has prescribed. So there is already a supply side challenges which we are facing, and probably this kind of crisis may impact the supply further. There may be a little dampening in the demand also. If that happens, probably the oil prices may not zoom, but if the demand continues unabated, probably we will see oil maybe crossing $100 a barrel, and definitely that will push the inflation, that will also push the current account deficit, resulting in some problem for all the countries. The way the world is integrated today, this kind of development is bound to impact every country, only the degree will vary.
All right, Mr. Sahai, stay with us. Colin Shah is the founder, MD of Karma Jewelry, also with us on the broadcast. Mr. Shah, thank you so much for taking time out. My first question to you perhaps is, you know, given in light of an active war, what happens to supply of precious metals, diamonds in India? We're exporting majorly from Israel. Is that going to take a beating? Is our export of and demand for, and therefore supply of precious metals going to take a beating in the short run?
No, not really. Though the war is unfortunate, our trade with Israel is not so large. Our exports are around $1.3 billion last year, and the imports are around $750, $800 million. So, you know, they account for 1% of our imports and 3% of our overall exports. So I'm sure that the trade will be able to cover that up in some way or the other, because Israel as such was never a consuming center. It was more a transit like Antwerp or Dubai or Hong Kong or any of the other ports. So while it's unfortunate what has happened, we are very sure that it won't really impact our industry as such.
But Mr. Shah, your industry is already facing the heat, if I can use the word, given the fact that we have seen a slowdown in India's diamond exports. We've seen discretionary spending in US and China both taking a beating, and imports of rough stones from Russia coming into India for cutting and polishing also now under restriction. So overall, the outlook for the diamond industry has been a little tepid this entire last couple of months. And now add to this the woes coming from Israel. Is there really no reason to worry for the diamond industry right now?
No, absolutely. There's a lot of reason for worry. And like you correctly mentioned, the industry has been going through, I would say, you know, a very tough time last 1 year. But that's more because of what we are seeing globally and not necessarily, you know, the Israel war as such. The slowdown in China has massively impacted us. The rough imports from Russia have impacted us. And more importantly, it's the slowdown that we are seeing in the American market. Though I must say, what's really happened is the retail, as we see it, and even the last 4 weeks, the heartening news are that retail is only 5 to 10% slow.
Okay.
But that 5-10%, you know, I would say drop in demand on the consumer front has led to a 25-30% drop on the wholesale B2B front, which are our exports from India. So we are expecting the pipeline to get healthier in the next 3 to 6 months, and business come back to normal for next Christmas. Our business, like you know, is seasonal, and you know, we've coming out of, you know, the pandemic. 2 years were extremely strong. And I guess the entire pipeline, there was a little bit of overbuying, and now compounded with all the issues we're having globally, there is just too much inventory with retailers globally. And as this one season, I think, you know, even if it's 5-10% down, we see consumption happening, weddings happening, we do firmly believe that next year we'll be back on track.
Okay. Go ahead, Karthik.
Mr. Shah, I want to come to you. Now, we've seen, of course, you know, war after war, in the region. First, we saw 2021 US pulling out of Afghanistan. 2022, we saw Russia and Ukraine going into conflict. Now we are looking at Israel versus Hamas. Overall, inflationary pressure likely to get further added. And if that happens, discretionary spending in the US likely to go down further. If that goes down further, any impact on India's exports that you're seeing? And I'm talking both manufacturing and services this time.
See, if you look at our industry, and I won't take, I won't be able to give a view on the other industries, but
okay, let's take it to Mr. Sahai then. Mr. Sahai, do you have a view on that, sir?
So definitely, if you look into the trend of the global trade, the WTO has come with the revised forecast where they have reduced the volume-wise growth from 1.7% to 0.8%, and even in services front, we are seeing little moderation. So this will definitely a challenging year so far trade is concerned, both of the goods and services. If you look into the goods imports by the major countries, except for some extent in the automobile sector, where we are seeing little growth, and in the agriculture sector, whether you are talking about petroleum, crude, or chemicals, or iron and steel, we are seeing sharp decline in volume terms as well. So definitely it's going to be a very challenging year for what exports are concerned, more so on the goods front, but in the services front also, the kind of growth which we have witnessed in the past may not be able to be sustained in this current year.
Okay, but talk to us specifically about inflation, sir. Is inflation going to become a more pronounced challenge than it already is globally?
No, in fact, if you look into inflation, the August number is at 6.83, which is much above the 4% plus.
I'm talking global inflation, so not specifically India. I'm talking global inflation and inflation in the US, which is then going to continue the rate hike cycle and therefore sort of cascading effect on India and rest of the world.
Absolutely. In fact, this is the factor which may not have been taken by any of the central bank, even without the factor the US Fed was talking about an increase in the interest rates. Now with this kind of challenge happening, many of the central banks may increase the rate. So inflation is definitely going to be a major challenge, particularly if the energy and crude prices moves northward.
Mr. Sahai, before we move back to the topic in hand, I also want to quickly begin and perhaps understand from you, we keep talking about exports picking up, and in light of wars, as my colleague Karthik pointed out, and now with Israel-Palestine conflict again shooting up, do you see exports picking up in emerging market economies as well as developed economies? Do you see demand coming back, sir? Because that's what we've heard commerce ministers say again and again. Are there any green shoots?
No, in fact, that's why I said that in some of the technology-driven sector and the food sectors, we are seeing increasing demand, but global demand, because of the high inventory, is still very low, and with the interest rates moving up, companies are managing with the lean inventory also. So that has affected the trade, global trade. India is not an exception. Look into the export number of any country. Every country is facing a decline in their exports.
Okay, let's also talk about supply chain disruption. There are news, of course, that ports are closing down or likely to be closed down, including the Haifa port where Adani has made a major investment. Freight prices are going to go up. What is another bummer would be an IMEC project, which was announced on the sidelines of the G20, the India-Middle East Economic Corridor. What is the possibility of that corridor, Mr. Sahai, going on as planned, or perhaps even starting operations? Yes.
No, that's true. I think IMEC project is still at a conceptual state. We have not worked out how much is the total cost of the project. We are talking about the route, which is a very linear route, which may not be working there. As of now, that's why I say the conflict is confined to the Gaza Strip, there's not much problem. The IMEC will be on track, but if some of the Middle East countries join it, or Israel is actively involved, probably the focus may be shifted. And that's why in such situation, there may be a question mark in timely completion of the IMEC also.
Okay, so that's the map of the IMEC, and just for the sake of our viewers, this is the India Middle East Europe Economic Corridor, IMEC as it is referred to, going all the way from Mumbai, the first port being Dubai, and from Dubai by road and by train, the cargo moving all the way up to Israel. And Israel Haifa port which Adani Group bought for $1.2 billion earlier this year, is going to be the point of transit to the northern corridor, and that northern corridor goes all the way from Israel and enters Greece, and thereby further by road and by rail networks into rest of Europe. And if you look at it in the context of the I2U2 from Europe, then the shipping lines to US become a direct sort of entry, and therefore trade between India with Europe, not just the Middle East, and therefore with US and reverse trade as well, becomes that much more barrier free. Now, as you see, Shweta, this port is this route is largely running through Saudi Arabia and thereby going into Israel. You really don't have much of a concern, if you ask me specifically right now, because it's unlikely that Saudi Arabia is going to get into this conflict at all. In fact, if anything, it will look at it from the sidelines, but militarily, economically, it's unlikely that Saudi Arabia at this stage at least is going to enter the war. If you were to look at the ports, let's move to the next map and look at the Haifa port. And after that, we could get into the statements which are coming from the Adani Group also. But if you just stay here for a moment, Haifa port is up on the north. Now, if you look at the map right now, you will see that the battle is actually being fought in the Gaza Strip, and that Gaza Strip is in fact south of Ashdod port.
So, in fact, Ashdod port has been bombed just about a couple of minutes ago. There are news items coming in that
I haven't seen that,
but bombing in Ashdod.
Haifa is up in the northern side of Israel, and right now it seems that the port is unaffected. A couple of hours ago, the Adani Group had come out with a statement. Let's pull up that statement also. The Adani Group saying that it is looking at the situation closely, and it is really monitoring the welfare of its employees there. And right now, so the statement up there, we are closely monitoring the action on ground, which is concentrated in South Israel, whereas Haifa is up in the north part of Israel. Another statement also coming in from Adani Group. This one is saying that for the current financial year, which is up until April last year to March this year, April this year to March next year, FY24, Adani Port is saying that we've guided for Haifa cargo volumes to range between 10 to 12 million metric tons. And the APSEZ, which is the Adani Ports and SEZ's total cargo volume guidance, is about 370 to 390 million metric tons. So a small size of the business, about 3% or so. But remember, if you go back to the map, this Haifa port is pretty much the port which is going to be the sort of making or unmaking of the India economic India, Middle East, Europe economic corridor. So Haifa port definitely important. But right now, statement coming about 2 hours ago from Adani Group saying that they are watching the situation closely, but no disruption in port operations yet, because Haifa is up in the northern side of Israel and the action is happening in the southern side. Right,
and there is no news report of Haifa port being impacted, but Ashdod, we are given to understand there's been bombing there. We'll try and get you more details, but I want to get Mr. Sahani back before we also go to Mr. Shah. Mr. Sahani, from what appears that
Sahai,
what appears that a dream for an India-Middle East economic corridors for the moment are going to be put a break on or break to with the latest situation as it is as escalating as we speak. My understanding, and perhaps you could elaborate on it, for the near at least 1 or 2 years, an IMEC project is not likely to come into fruition.
I think it's too early to predict the same. That's why I'm saying all depends how much is the duration of the war, how intense is the war. If it is not a war where number of countries join it, I don't think there is any impact on the IMEC corridor. If it escalates into war and it prolonged for many months, probably the project may be delayed, but it's a long-term project in any case. The huge investment has to take place. As of now, I won't say there is any challenge to IMECC, but of course there are concerns with regard to that.
All right. Also, Mr. Shah, before we let you go, you said that it appears that the ongoing escalation of conflict in Israel and Palestine will not have any likely impact on precious metals and diamonds, but it is going to further deepen the crisis that Indian precious metal industry is facing at the moment. Would you agree with that analysis?
Yeah, I agree with that analysis. And, like Mr. Sahai said, we are going through a tough time, and there's no doubt about that. We're just hoping that this tough time ends as we see some, I guess, closure to especially the Russia crisis. I guess that has a larger impact on our exports and the industry out of India than what's happening in the Middle East right now.
All right, Mr. Ajay Sahai, Colin Shah, thank you very much, gentlemen. Thank you for taking time out and for joining us this afternoon. But as the ongoing conflict, Karthik, continues, we continue to bring more stories. But what seemed to be an immediate impact is that trade will remain robust, perhaps, if the war does not escalate any further from here. There are, of course, calls to bring peace into the region. We don't know whether that's going to happen or not. But the immediate impact could be on crude prices, could be on freight prices, is what we are going to see in days and weeks to come.
It looks like, Shweta, honestly difficult to put a finger on any side of the story right now. I think it's a function of the war is just 2 days old technically. So, you know, I think whatever trading we are seeing even on crude right now is more on speculation, more on sentiment rather than any fundamental disruption of any kind anywhere. So I think we'll have to wait and watch and see how this war unfolds and how it escalates or de-escalates, and basis that perhaps, you know, all agencies, all countries worldwide are going to recalibrate their numbers, their figures, both on inflation, on oil, on trade, and everything else and supply chains and everything that goes into making of economic policies going forward.
All right, and we'll keep bringing you those details here on News9. Thank you for watching.
Hello everyone, Namaskar. I'm music composer Ricky Cage.